Oh, hi, I'm Max Keiser. This is the Keiser Report. Oh my gosh, global domination is in the works for Bitcoin. Stacy.
Yes, we're continuing with our theme of covering what is going on in Satoshi Roundtable because, of course, many people might think, wow, there's a huge, giant Bitcoin bear market. But just as in previous Bitcoin bear markets, what you and I have witnessed as participants in the Bitcoin space is that there's a lot of building going on, all sorts of great innovation. And in fact, you know, the fact that nobody's paying attention to it, certainly in the mainstream media anymore, it gives a lot of breathing space for people to build. And we saw that down at Satoshi Roundtable. We saw a return to Bitcoin maximalism, by the way. You know, the flurry of all those ICOs, initial coin offerings, and free money being thrown by investors, so-called investors, at the space. You know, was a real big distraction. And most of the mainstream media was just focused on that because they love the spectacle. But here we have people like Bill Barhydt. As you know, you've mentioned before, he was an investor. He's helped sponsor Gonzo. His background is he was a cryptographer trained at the CIA to be a cryptographer, and then he worked in the banking sector. And he's come up with a really fascinating new tool on his Abra app. And it basically establishes a global Bitcoin standard because you now have Bitcoin as a unit of account through his new app. And you could go watch a Keiser Report interview with him back at 1342, I believe it was. Abra app unveils Apple stock price exposure pegged to Bitcoin. How the Abra app establishes this is through what they call crypto-collateralized contracts. So you, a user of the Abra Wallet, which is a non-custodial wallet, i.e. you own your private keys, not them, how they establish this, your exposure to Apple is a contract between you, the user, and Abra. And it's not direct ownership of the equity, the Apple stock, but this crypto-collateralized contract. If you use Abra right now to hold euros or Monero or Zcash in the Abra app, what you're actually getting is what we call a crypto-collateralized contract, says Bill Barhydt. It basically takes Bitcoin and pegs it to the value of whatever asset you want investment exposure to, whether it's the euro, Monero, Zcash, and with this new announcement, Apple shares, it makes no difference. Meaning, if you buy $1,000 worth of Apple, and you're using Bitcoin to actually make the contract, if the price of Apple goes up, you end up with more Bitcoin. If the price of Apple goes down, you end up with less Bitcoin.
Is this an Ethereum, EOS, Cardano killer? You know, a smart contract coin killer? Quite possibly. Is it also a Robinhood app killer? Because this is available to countries all over the world. 150 countries have access now through the app to buying Apple stock without KYC or AML, without any regulatory layer whatsoever, because they're not holding these securities. They're holding synthetic securities that are backed by Bitcoin, and it's held on by the client, by the phone. So this is a total game changer. And I talked to Bill about this, and this really, truly does democratize finance in a lot of ways, because buying Apple stock for the vast majority of folks around the world is actually quite difficult, especially if you're not American. So here you have the ability to participate. And when folks are talking about socialism, like Cortez out of New York, that congresswoman saying AOC, that, you know, socialism is back and we need higher taxes, we need redistribution of wealth. That's actually not the solution to some of the shortcomings of capitalism. The solution is access, to give people access to capital, because 50% of the stocks in America are owned by 1% of the population. Now, that's an incredibly lopsided concentration of the greatest growth engine in the world by a very small community. If you democratize that and spread it out and give people access, they could put $5, $10, $20 via the Abra app, and they can own these stocks. They have access now to the growth of the global economy and the high growth of the global economy. And they won't be talking about, you know, socialism any longer when they've got a hot portfolio in their app and they're participating in the growth, and they see that the fruits of their labor are being monetized and they are lifting themselves out of whatever constraints they perceive to be in.
Well, exactly. You mentioned $5. That is the minimum investment in this. Try going to a stockbroker and trying to trade $5 worth of shares. They're not going to give you any time. So you could get exposure to, especially, you know, if you're outside the empire, we as an imperial nation are going to basically, like in Venezuela, we're going to come take your oil. And if you watch CNBC and Bloomberg News, they're celebrating what this is going to do for U.S. stock prices and U.S. multinational oil companies. Well, if you're Venezuelan, now you could buy $5 worth of, like, you get some of your money back for the theft of your
It's a hedge
assets.
against empire.
Yes. So it's a good way to do that. And I want to also note that, you know, this is more of like, Abra itself and Bill Barhydt have developed a way to hedge. They hedge all of these positions. So how do they price this? How do they get because they're not actually giving you exposure to Apple when you buy Apple shares exposure on their platform, but they themselves might end up buying some Apple. There are ways that they're hedging it in the background, but as you mentioned, it's synthetic. So this is more like, you know, with your virtual specialist technology, what they're working on in the background is more of a derivatives that they're, you know, that would be their regulatory regime rather than, say, the SEC or any sort of, should they ever determine that they want some sort of regulatory oversight. This is more of a out of Chicago sort of product.
Well, not to diminish the power of this product in any way, but they have in fact gamified global stocks, bonds, commodities, currencies to make it available to anybody with $5 and a dream and this app. And on the back end, they're using Bitcoin, which is invisible to the user. Another huge point here, and I talked to Bill Barhydt about this, is that the adoption of Bitcoin, people perceive that it would be driven by payments, but he believes it'll be driven by Bitcoin as collateral, Bitcoin as settlement layer, Bitcoin as smart contract, which the market for this product is literally in the trillions, And if that's all backed by Bitcoin, the demand for Bitcoin just went up by 100x.
That's what I was saying previously about gold being actually the settlement layer of our fiat system, is whether or not the, you know, our leaders like to basically let you know that, you, the ordinary citizen. They don't want you to know that because they don't want you to start accumulating gold on your own. But the fact is, and we saw that again with Venezuela, when England refuses to give, the Bank of England refuses to give them their gold, and they, you know, you see headlines all the time about there's some gold they're sending to the UAE and things like that. That's the actual settlement layer underlying all of these bad debts and the derivative system. According to Barhydt's explanation, when users enter into a trade or investment on Abra's platform, gains or losses are accounted for on both sides based on Abra's technology, thus impacting the collateral, i.e. Bitcoin, that the user put into play for the trade. Users, however, still hold their assets or private keys on their phone themselves. The app's assets backup phrase is also encrypted, subject to a PIN code users must enter. So you own your assets, you own your underlying asset, which is Bitcoin. Nobody else owns that.
Right. There is ownership of Apple stock in that mix. It's done by Abra on their hedging desk. It's just not done by the user on the app, which gives the user the ability to bypass all KYC, AML, regulatory framework, and it's a global product. Whereas Robinhood app and other fintech apps are completely bound to their geographical regulatory domains, and so this, again, will usurp them.
And I'm going to read you another paragraph about Barhydt and what he says about this, and it does, like following up on what you just said, it does show you that this vast advancement that Bitcoin has allowed as a settlement layer for a global financial system where fintech looks so far behind. So Barhydt explained another advantage to Abra's model is the absence of clearing. Abra's model does not involve buying the underlying investment assets for customers. We're not actually taking possession of equities on behalf of a consumer, Barhydt said. This all settles on the Bitcoin blockchain itself in a global decentralized network, so there's no concept of broker dealing or any kind of swap execution facility underlying this platform. It makes it really clean and legal in 150 plus countries.
Another question I asked Bill Barhydt about the Abra app is, Bill, does this obviate the need for security tokens in the crypto space? And his answer was yeah, except for tokens that might cover illiquid securities. Anything, because you need liquidity to put on the hedge. If it's an illiquid situation, then yeah, maybe a security token makes sense. But okay, not to cast doubt into the mix, but I would think that T0, another platform that's going to be securitizing tokens in the equity space, I mean, this seems like a bit of a challenge to that.
Well, luckily, in the second half, you're speaking to Simon Dixon, who also has a security token platform, so you'll be able to talk to him about this.
Yeah, I'm going to see what Simon Dixon has to say about it. That's just, my out-of-the-box thinking, my preliminary thoughts.
Well, again, there might be other ways of offering equity. People want to offer equity in startups. On this, he's offering basically exposure to traded assets on the global markets. So these are startups offering equity in those security tokens. One caveat, however, is that an element of trust is required by consumers, trusting that Abra's system will effectively hedge appropriately. Although Abra has a sound track record thus far, quote, Abra has done this with close to $1 billion in transaction volume and made every consumer whole on every single transaction in over 100 countries, Barhydt assured me. Barhydt also circled back to last year's crypto and asset price action. Bitcoin fell 85% last year, and we did not break a sweat, he noted. Additionally, he told me Abra has insurance policies in place as an additional backup. So there is that element of trust, that you're trusting that his, they're hedged appropriately and the whole thing won't blow up and your contract default.
Yeah, it should be noted also that all the trades that you put on are without any fees for the user.
For the first year, 2019, should you sign up now. But then there will be fees from 2020.
Well, fair enough. Well, looking forward. It's very exciting stuff. So again, Satoshi Roundtable, the preeminent event in the crypto space, the Bitcoin space. We got to talk with some movers and shakers in the business. We're breaking late news that is just hitting the tape now, and we've done reports on it. Bruce Fenton and the gang have done another outstanding job. This is their 5th roundtable. And what can I say other than it's probably the best event in the entire space, bar none.
Yeah, I mean, behind the scenes, it's just remarkable that the more the mainstream media focuses on Bitcoin, the worse it's doing. The fact is, as soon as they look away, like all the real stuff is happening, and they've got rid of all the distraction of all the hype and all the, the people who frankly don't know what they're talking about, because they're focused just on the price. And this is a new space being built. Had you just focused on the price of the .com shares, you would have never thought that all of this internet was being built. The fabric of our lives exists now on these smartphones because of this new developments of all the internets that happened during the .com crash, for example.
So true. We're going to take a break. And when we come back, Simon Dixon back with all kinds of insights. Don't go away. Welcome back to the Keiser Report. Time now to turn to Simon Dixon of BnkToTheFuture.com. Also just launching their app, available on your phone. Download the Bank to the Future app. It's frickin' great. Simon Dixon, let's get right into it. We are back from Satoshi Roundtable. You are still there. Tell us about the mood of the Bitcoin maximalist space in the depths of this longest Bitcoin bear market ever, Simon.
Yeah, I'm still here in Cancun in the hotel room, and I didn't want to leave because it was so good. The people that were here were all the people that are still in the depths of building after a one-year bear market, and therefore either their companies had good money management, or they are just the fundamental people that are going to be here no matter what. And so we saw lots of interesting discussions around scaling solutions and Lightning Network. We also saw lots of institutional players that are launching their custodial solutions and the next wave of crypto exchanges. And also some of the alternatives markets like security tokens and disruption in capital markets built upon Bitcoin and other protocols.
Now, Jack Dorsey, of course, the CEO of Twitter and Square, he started a lightning storm on Twitter by joining the Lightning Torch. Your thoughts on this moment and on his Bitcoin maximalism on display? He openly dissed altcoins, and he really has come out as a Bitcoin hodler. How do you see this playing out, Simon?
Yeah, well, it's fascinating. I believe that Jack was one of the investors in the Lightning Labs funding round, and now he seems to be getting his, getting himself into it. When we were in Cancun, Max, I think I did my first Lightning transaction to make a purchase, and it really seems like the node count is going up. It seems to be on a growth path, and I'm really looking forward to seeing what companies like Twitter and Jack is going to be doing, exercising his influence in Silicon Valley in order to grow the next wave of scaling using the Lightning Network. So finally, after all these years and all these debates, I'm really looking forward to seeing something that actually users can use and people can do in what appears to be this solution for infinite scaling of transactions upon the Bitcoin blockchain.
Yeah, interesting. Jack Dash was openly contemptuous of Bitcoin Cash, of course, the contentious hard fork that was supposed to be in lieu of scaling the Bitcoin network, but we're seeing now scaling happening in leaps and bounds. Roger Ver, the big sponsor of Bitcoin Cash, was baiting Jack Dorsey on Twitter. Jack Dorsey, of course, a multi-billionaire, 2 huge successes with Twitter and Square, taken public already. I think he might be above the fray, Simon. What do you think?
Yeah, so I mean, the one thing I do like about Bitcoin Cash is their focus upon merchant adoption. At Bitcoin, we've been very much focused on store of value, but now we've got Lightning Network. Hopefully we can get back to looking at what we can do with merchant adoption again. And I think, in orders of magnitude greater scaling and solutions that we need to work on. There's still a long way to go to get the usability right, but it's great to see that we've, if Bitcoin Cash, if they want to continue focus on merchant adoption, it's great to see that Bitcoin can get back into that game as well with the Lightning Network after all this time of trying to get the technology ready for the scaling solution.
A couple of nice notes there for the Bitcoin Cash. Now, also at Satoshi Roundtable this year, Bill Barhydt from Abra, he announced a new feature on their non-custodial wallet. It's a crypto-collateralized contract which enables users in over 100 countries to get exposure to various assets, including equities. What are your thoughts on this? This seems like an awfully big news, Simon.
This is really exciting. I remember back in the day at BnkToTheFuture, we were looking at acquiring a company that was actually using contract for difference built upon Bitcoin to allow people to actually buy equity using Bitcoin. The problem is that they were using a unregistered, unlicensed securities broker that existed somewhere out in the sphere, and nobody knew who they were. So I was forecasting their being taken down, and in fact, they were actually shut down. The company was called One Broker. But it appears that at Abra, they're actually built a solution that uses Bitcoin as a backbone to allow people to use Bitcoin and any cryptocurrency, in fact, in order to invest in the public equity market. At BnkToTheFuture.com, we've been focusing on the private equity markets, allowing people, now we have our secondary market to buy and sell shares in some of the largest crypto companies. And now Abra is moving forward with their solution, allowing crypto to be the backbone of allowing the whole world to onboard into some of the private markets. And it's a really exciting development, and can't wait to see where Bill and the team are going to take it next.
Yeah, I wanted to get your comments on something Bill was talking about at the Satoshi Roundtable in Mexico. I had a chance to talk to him. And he was suggesting that the demand for Bitcoin as collateral or used as a settlement layer for the smart contracts that are the engine of the new Abra product would boost demand for Bitcoin much greater than the idea of Bitcoin as payments. So we first came into Bitcoin. As a matter of fact, you and I were at the first Bitcoin conference in 2011, and companies like BitPay were there. And the idea was behind BitPay was Bitcoin would be their service would be similar to PayPal, and the focus was definitely on payments. And we've talked about that in terms of how this would spread adoption of Bitcoin. But now with what Bill Barhydt is saying, I'm curious what you think. is that Bitcoin used as collateral as the settlement layer for this new platform, allowing anyone anywhere in the world to buy into stocks, bonds, commodities anywhere in the world with no KYC, no AML, no regulatory issues, would be the big boost for demand for Bitcoin, Simon.
Yeah, it's fascinating to see where this actually goes. So, a lot of Bitcoin up until now, kind of switched from Bitcoin as a medium of exchange to Bitcoin as a store of value as people started to, and the phrase hodl came along where people were holding on to Bitcoin and they didn't want to actually spend it because no one wanted to be Bitcoin pizza guy. But now that industry is evolving, we're also seeing people use the fact that people want to hold on to their Bitcoin and maybe use it as collateral to get some returns on it so that they can actually use it for some of these different user cases. And that's very interesting. I don't fully understood what is under the hood of that yet, so I can't comment on how it actually works, but it seems like Bill's been working on this for a long time. And then at the same time, we're now getting, that next wave in scaling and lightning channels and very early still, but then we might actually have store of value, medium of exchange, collateral, all on top of Bitcoin with all different user cases pushing for adoption in every different direction. And one of the other people that was at the conference that we spent some time with, Max, was Saifedean Ammous and his Bitcoin standard. So it seems like we're getting, that the Bitcoin has the potential to actually be that apolitical disruption in central banks, independent of any government as well. So this is really exciting time. And really, it took the bear market to draw this out so that we can all focus on building in the next wave of scaling as we move into the bull market coming up.
Right. Those were great conversations with Saifedean Ammous in Cancun at the Satoshi Roundtable. And of course, he did just come out with the Bitcoin standard recently. It's become an international hit, translated into many languages. And this idea of Bitcoin as unit of account or as a strategic reserve asset, even on the central bank level, is gaining currency. And so products like Abra's now are putting that focus on that use case for Bitcoin. Let's talk about Bank to the Future now, Simon. You've got a new security token wallet. Tell us about it. Is it a non-custodial wallet? What sets it apart from the competition, Simon?
Yeah, so the BF wallet is designed as our first step into the securities token ecosystem. We were primarily built as an equity business, and we got shares in many of the largest companies in crypto. And now what we want to do is gradually iterate over to allowing our users to store their own assets in a non-custodial way. We've launched our centralized secondary market for trading companies. That's in beta. And then what we want to do is iterate over whereby people can take those assets off in a way that's compliant with securities laws and hold them in their own wallet. And then be able to send them to a network of, registered, licensed exchanges and people building in the securities token ecosystem. So it's not really due to compete with some of the very popular wallets in terms of storing cryptocurrencies. It does actually do that. You can do that. But it's our play into really moving and iterating over to the growth of the securities token market.
Yeah, just briefly give a point on differentiation between custodial and non-custodial wallets.
Custodial is essentially banking. When you deposit your money at a bank, the bank becomes the legal owner of your money, and therefore they can interrupt, they can lose it, they can tell you how to spend it, and therefore you have all the challenges around that. Non-custodial means that because Bitcoin allows you to own your own money and spend your own money, and you can store it on your own device, wherever you may be in the world, then you take the responsibility of actually storing and securing your own assets. Both of them have an advantage and disadvantage. Most people are not really ready to take care of their own personal security, so they like to start with custodial services, learn the lesson of what happens when somebody else holds your money, when you can be subject to bail-ins or hacks or just straight out fraud and scams. And then you gradually take the time to learn non-custodial solutions, take care of your personal security, and use Bitcoin and cryptocurrencies the way they were designed, where you can own it, spend it, and get some of the major benefits of self-sovereignty and freedom that this financial product is actually giving people.
Right. We've got about 40 seconds left, and hopefully I can hold you over for a second segment. But before we go, let me ask you, why this drive for security tokens? And did the ICO, the initial coin offering craze of 2017, put a dent in that idea, Simon?
Securities tokens are really coming out at, looking at a defense against the fraud and problems that were created in the ICO market. The jury's out about whether tokens actually add value or not. But we're iterating, we're doing things in a centralized way and giving people tools to actually do it in a more decentralized way. And we'll find out what users and investors actually want as this market grows.
All right, that's great. We'll hold you over for a second segment. That's going to do it for this edition of Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Simon Dixon of Bank to the Future. Download the new app. If you want to catch us on Twitter, it's Keiser Report. Until next time, bye, y'all.